Mark, yesterday you were unimpressed with the price action. How are you feeling this morning?
It's pretty neutral today. We've actually just been discussing the Kospi. It kind of finished in that weird range where we can't kind of say it's conclusively bearish or conclusively bullish. What I will say is the recovery, the bounce we saw on the Kospi today was almost entirely driven by Samsung. That's not entirely unusual, but it's driven specifically because of fundamental news about Samsung potentially having a large amount of buybacks. I think the US dollar amount was almost $50 billion in buybacks. So therefore, I would say on net, the price action was not great. You're right, both of you, to highlight that it's all about Micron earnings tonight. That's just going to provide more volatility. Volatility should normally be just a negative. Obviously, we all look at kind of volatility adjusted returns if you're a trader. And there's a mechanical thing that if there's higher volatility, it means higher volume at risk. It means lower ability to take leverage or margin. Now, what's weird at the moment is that retail participation is so large in these stocks, and they're trading it like a casino that's kind of rigged in their favor. Everyone knows if you go to the casino, the odds are in the house's favor and you're going to lose your money eventually. But there's kind of this perception that central banks and the US administration are determined to get the stock market higher. And so therefore, this is like a casino with wild random returns that are skewed in your favor. And the reason I kind of go into that digression is that it's in this weird dynamic that normally a catalyst Micron that we know is going to stir up big volatility, that would be normally just be a pure negative. But in this market driven by retail, some of that negative impulse is kind of slightly kind of negated by the fact that retail see it as a great positive.
Mark, is there a case to be made that if this is some of the froth taken out of the markets, particularly in terms of the chip and AI trade, that is healthy ultimately and sets this bull market up for further and more sustainable gains?
I'm going to be difficult by saying no to construction, but yes to the ultimate question. What I mean by that is I think that this is froth coming out of the market. I dispute the idea it's healthy. We talked about that since the market kind of became broken in May, that we're in this volatile end stage. We don't know how long it's going to last, but in 1999 in the GFC, it lasted about 6 months. So that's my ballpark estimate, but who knows? It might be much shorter, it might be longer. So we're in this kind of volatile end stage. We're expecting more of this kind of massive, crazy moves up and down. I don't think this is the bubble popping. I do think we have a massive AI capex bubble that's going to be really, really problematic when it bursts. I don't think it's finished inflating yet. I just think we're in that volatile kind of end game, and I think we've got more inflation to come. And maybe Micron earnings tonight will kind of stir it up. Without having any insight on Micron earnings, and that really is dominant, I would say that my slight bias is that the current sell-off isn't quite exhausted yet, but this isn't the bubble bursting, the bigger bubble bursting.